Morning, everybody. Good morning. Good morning. Morning. Good morning. Morning. Good morning. All right. Sound is good. Video's good. Picture's good. Today's good. All right, ladies and gents. Good morning. Happy Thursday, March 12th, 6:30 a.m. my time here in Kansas City. What a day yesterday, ladies and gents. I had my third interview. Morning, Zenny. Good morning. My third interview I had to prep yesterday. It was a crazy, hectic morning. Sorry I didn't get on yesterday, but I think all that distraction is done now. I think that's my last interview. I just felt like I needed to prep for it. And I'm glad I did. I think I knocked it dead, guys. It was my third interview. It was with the vice president of the company. So it was a pretty big deal as far as I'm concerned. I had one with the marketing director to start a week and a half ago, 2 weeks ago. And then last week I had one with the two news desk managers. And then, yeah, you just progress through the rounds, so to speak. And then finally yesterday was with the vice president of product. So, but anyway, yeah, all that's over with now. All that's left is just waiting and seeing what they said. If you guys have been through a series of interviews before, you'll know after each interview if you did good or not. So the first interview, my gut told me, okay, that went pretty well. Sure enough, I got an email saying, we want to talk to you with the managers, the marketing or the news desk managers. So I went through the news desk managers round last week, and my gut told me, it was a little sketchy there. You got the answers right, but you were a little slow to respond. I think part of it was nerves, to be honest with you. And then lo and behold, they said, we want you in for round 3. So I felt really good about that. And I'm my own worst critic, guys. We can all be our own worst critic, right? People tell us all the time, you can do it. You can do it. But sometimes there's that little devil on the shoulder saying, you're not good enough. You're not good enough. But I must have successfully defeated it. And so anyway, when I went to yesterday's interview to finish it out, as soon as I finished, my gut felt good. Like, you nailed that interview. So, yeah, good stuff, guys. It was good stuff. But anyway, sorry for all the distractions I've had of late and being tardy on a few of the lives, or obviously in yesterday's case, missing it. But just trying to get things set. So anyway, enough of that. Back to the markets. I am still in a pound dollar short. And I was just going through one of my trusty news sites, FX Street, taking a look at their something I would let you guys know if you don't know this. If you're just looking for like a very simple news source when it comes to trading the markets that we trade every single day, FX Street, if you go to their page, fxstreet.com, and just go to the news section up here, you can just hover over it and then click on Forex News, like you see there. Usually twice, sometimes 3 times a day, and it's usually once in like the London session and once towards the end of the New York, or I should say towards the beginning of Asian session. What they'll do, there's usually 2 or 3 guys that do this, but they'll write up a little news article titled Forex Today. So, in fact, let me do this. Yeah, hold on a second. I'm just trying to go from the start. Okay, so news, Forex news. But anyway, yeah, they Forex Today, that's the title of their news article. So just sometimes you got to scroll through some of the other articles. Now, what's going on here? Excuse me. Here, let me refresh my screen. Sorry, it was the font of the text was not looking right. Okay, news, Forex news. Okay, this looks better. So anyway, scroll down until you find, what is this? It normally just scrolls all the way through. Scroll down till you see that title. So here you go, Forex Today. Okay, and this is a article that came out 4 hours ago. I like these specific emails. I like these specific news articles because it kind of breaks down the most important items between, most of the assets that we trade. So anyway, today, for example, markets risk averse in the second half of the week as the conflict widens. Okay, talking about the bomb dropping over in Iran. Economic calendar today will feature, obviously, the housing starts goods trading balance for January, alongside most important thing, which is the weekly jobless claims. Our red folder event over. Oh, good grief. I'm sorry, guys. Got to share my damn screen. Share. Sorry, guys. Yeah, so I was just talking about the unemployment claims, which is our one red folder event today, just kind of hanging out amongst all the yellow folders. Yeah, I'll give you Zenny. Yeah, let's look at Dixie here first thing. Yeah, I'll just finish off this news article piece. But anyway, yeah, guys, sorry. I thought I had my screen shared a minute ago. So yeah, fxstreet.com, up here where there's the news tab, you can hover over it and then just kind of go over here and click on Forex News. And I'll just do it from the start once again. So anyway, they're really good about writing up individual articles about individual currency pairs, which is really good, really nice. Okay. And then obviously oil, gold, silver, all the rest. But anyway, scroll down through these articles until you, and there's one for silver. Okay. Aussie dollar. Like I really, really like this site. It's one I've been using for quite a while. But anyway, just scroll until you find the most recent article that says Forex Today. So we're down to page 2. There's euro, dollar, yen. And it's actually, this one's going to be on page 3 today. So right here, Forex Today, oil and USD rise again as safe haven flows return. These are some of my favorite articles because they kind of brief over, most of the assets. Click on the article and check these out sometime. And remember, this is actually on my trading plan. Right here. Look at relevant catalysts. Okay. It says FX Street there in parentheses. That's because it's one of my favorite sites. Okay. So check it out. And let's just read through the article today. Okay. This is just a quick snapshot of what happened overnight. Because when we wake up, regardless of where we live in the world, right? When we wake up, the first thing we want to know is what happened overnight. Just give me a brief understanding of what happened overnight. That way you can have that instant understanding of what you missed, right? We all miss something because we all have to sleep, right? So anyway, markets risk averse in the second half of the week as conflict in the Middle East widens. The economic calendar is going to feature a couple yellow folder events, but then also our red folder event, which is our weekly claims, our weekly jobs claims figures. So just instantly understands what I'm going to see over here. Okay, unemployment claims. As far as my red folder events. Okay, and it's going to give you that the most important thing. So here we go. The IEA announced on Wednesday, 32-member country unanimously agreed to make 400 million barrels of oil from the emergency reserves available to the market. Okay, so automatically I'm thinking, okay, I need to go check oil. Okay, the decision limited crude oil prices upside. Latest headlines coming out as the supply fears are revived. Revived supply fears. Okay, if there's supply shocks, that tells me what? Oil is probably going to go up in price. Okay, Iraq reportedly shut down oil port operations after Iran attacked 2 oil tankers. So again, supply shock, price of oil likely to rise. There were some Iranian missiles intercepted by Bahrain, Kuwait, UAE. Okay, Saudi Arabia's defense ministry said 2 drones heading towards the oil field were destroyed. Okay, so that's a good thing. We want to know things like that. Okay. Geopolitical events, anything that can cause supply shocks. And obviously, not to mention, we got the Strait of Hormuz issue going on, right? Where the U.S. Navy, or I should say more broadly, the U.S. military is likely to start escorting oil tankers just to avoid the drone or the mines, all the mines that Iran is threatening to put out to blow up tankers and such. Okay. Chinese government has effectively banned refined fuel exports for March with, look at this, immediate effect. Huge. This is a huge piece of a huge nugget of info I want to know first thing when I wake up. That's a big thing. Okay. China is one of the largest economies in the world, right? I do believe they are, right there with the U.S. They do believe they are the top. Remember, they got over 1 billion people in China. That's a huge population, right? So a population over 1 billion is banning exports. Supply shock, less oil in the system means higher prices. This is all this is a supply and demand equation. Okay, that's why I trade supply and demand zones on a chart. Because when you start threatening to take away supply, what's the demand going to do? It's going to go up, right? Okay, another step to preempt potential domestic fuel shortage caused by the war. Start looking at the prices of oil. Look at that, 94.5 per barrel. I do believe we were in the high 80s yesterday, so we'll take a look at oil here in a minute. And then it just kind of goes through some of the top pairs. So the dollar benefits from that news on the souring risk mood, which I want to know immediately because I'm in a pound dollar trade. Okay, pound dollar remains under pressure. Obviously, dollar strength means the pound is going to go down. It's going to lose value relative to the dollar. So it remains bearish under pressure on renewed dollar strength and trades below 134 in the morning, European morning. Okay, I'm happy to see that because I'm in a euro. Again, I'm in the pound dollar short. So it just instantly gets my mind to thinking, okay, I'm feeling pretty good about my trade for now. Okay. Now, obviously, we don't wish war and chaos or any of that nonsense on the world. But if there's going to be chaos, we might as well figure out how to make some money off of it. And it's shitty as that is to say, that's just the reality of trading. That's the reality of markets. There's always a winner and there's always a loser, right? Dollar yen rose. Okay. So this automatically tells me dollar up. And even so, gold is remaining relatively quiet. Gold and silver haven't really been acting right lately, in my opinion. But it also makes sense. Trader Nick does a much better job about explaining this than I do as far as the reasons gold are kind of going sideways. But yeah, I mean, look, at the end of the day, it's not on our top setups list to be buying or selling. So we just want to stay away from it. It's too neutral. Way too neutral. So anyway, getting back to the dollar, just to kind of sum that up for you, Zenny, a little bit of oil shocks. Dollar would be the beneficiary. So let's go look at the Dixie. See where we're at this morning. Okay, let's go to a 1 hour over here. So on the right, we got our daily as always, guys. Okay, when prices closed yesterday, the New York intraday session and reopened for Asia, we got a big spike up, a gap up. But now we're kind of closing that gap. This is the 1 hour chart over here on the left. So what I see is the fact that we're closing the gap. Now that we're closing the gap, do we have a demand zone that could possibly bounce prices back up? And so far, if I'm just looking at this on a 2 hour chart, yeah, I got this right here. Okay, so when you see a gap, when you guys see a gap, and let me just do this for a second. This is important. So when you guys see a gap like we have yesterday on any asset, I want you to picture this. Okay. Just pretend that instead of a gap, you see a big green candle. Let me get it drawn up here for you. Okay. It's invisible. It's a gap. There's nothing there physically, but the reality is it's all that is one big green candle. And this is the same in reverse if you have a gap downwards. Okay, just pretend there's a big red candle. But in this case, and then anytime you see a gap, this is the reality. And I wish I could just kind of move it over. You get what I'm saying. Let's try this. Well, whatever. I was trying to get it directly up, but I can't. So yeah, that's the reality, guys. Even though there's a gap there, even though there's no space, the reality is it's no different than having a big green candle. So what does that mean? It means a gap. So what's on the other side of gaps typically? Unfilled orders. How do we find unfilled orders? Drawing up a demand zone, which is what we've done here. Okay. So, the way I see it, we just now are bouncing back down into that support, okay, to catch unfilled orders on the dollar-based pairs for possible dollar pushes up. So that's our technical bullish look. And then not to mention, like we just read in that news article, okay, the dollar is going to gain potentially from this, from this potential risk off catalyst. Talking about the oil shocks, okay? The $400 million reserves, China banning exports, okay? The largest economy in the world, banning exports, the most populous country in the world, right? So anyway, that's just a couple ways to put together a couple pieces of info to, give you an idea what the trading day might look like, at least to start. Okay, doesn't mean we're going to be risk on all day or risk off all day. That just means to start, because yesterday was a great example of starting the day risk, risk on, and then going to risk off midday. It was risk on, and then as soon as, trying to remember what the catalyst was yesterday. Here, let's do this. Let me go to a chart. I can't remember exactly what the news piece was. Well, I'll come back to that thought. Anyway, so yeah, just to kind of wrap up the Dixie part there. Yeah, risk on, and that's what I like to hear. Now, for my pound dollar short, I liked also. That's another thing I like about seeing the Dixie, the dollar, bouncing into a demand, because I want the dollar to go up, just like I want the pound dollar to go down, showing the dollar strength, right? So yeah, this is as of right now. This is sounded pretty good for my trade. Let's go look at pound dollar, and then I got a couple other things to show you guys. Let me get it up on my notes over here. Yeah, I want to show you the Dow entry that I missed. So I didn't lose anything. I just didn't gain anything. Yeah, we'll get to that in a second. All right, pound dollar. So this was the trade, guys. If you remember, I had this zone on top of a zone over here. Got into the trade here with the expectation of putting my stop loss up here to take into account this 4 hours supply. Just if you guys remember. And this is where patience it really tests you, because when price started pushing up, this is where I'm sitting here in drawdown in Tuesday, right? and it's just kind of dancing around there. This is where it gets awful tempting to, start freaking out. But remember, this is why I let trades open for a couple, 3 days, 4 days. You got to give it time to work. One can feel a bit of despair when your trade's in the red pretty high up here. But remember, you just got to give it time. So for me, my analysis said I got to wait for it to roll over. And that's what it finally did. Okay, we broke structure here. Okay, we broke it right here and closed. So that's where I started to really feel good about this. And then just to recap, it had left us a brand newly created supply zone in its wake after chewing through the 4-hour zone, which is ultimately what pushed price, started pushing price back down. So this turned into a second chance entry. Now, I was already in the trade, so I didn't do anything to it or add to it or anything. But if we were not in the trade, we have the benefit of seeing that this little price action, this batch of red candles, is a brand new impulse leg. It's an impulse leg because it broke a structure and closed it. Okay? So this automatically turns into the point of interest. Hey, where can I find a supply zone somewhere in this price action right here? Okay? And again, we can see our indecision candles. So that would be our supply zone. We also see the fact that it left us a fair value gap in its wake. Okay. This is our gap it left us. So that right there presented a brand new opportunity to short. What's going on, Algo? Price bounced in, rejected, pushed down, broke a structure again. And then in its wake, it left yet another supply zone right here, guys. Okay. Left another supply zone. And what happened? Price came up to that other supply zone, bounced in, and starts pushing away, created another opportunity. So, it's nice to get these pictures every now and then just to kind of take a step back and see how supply and demand works. It works all the time. Now, it doesn't always catch enough of a bounce to push price against, into your favor, but a lot of times it does. I mean, think about it. We bounced into one supply zone right here, which is the one I ultimately shorted on. It got a reaction, so it did its job. It just wasn't enough of a bounce to sustain. So instead, we had to chase more unfilled orders. Okay, back here. So that's what happened. Price bounced into that higher up supply, and that's ultimately the one that started pushing it back down. So we got that initial bounce, okay, a pull back in, caught some more unfilled orders, and probably even on a smaller time frame in this candle right here, probably we might have had a zone. Okay, I didn't even dig down that deep, but because I try not to get down into the noise too much. But anyway, yeah, we bounce back in, push away. Again, we create that next supply zone, we bounce in, and that supply zone does its job. It pushes price away, collects unfilled orders because there was a gap. Okay, push price down, break another structure. That makes me feel pretty good about another return to price. And that's exactly what we got. Another supply zone that got bounced into, and the unfilled orders were pushed price away, broke another structure. So thought that might be a good visual just to show you guys, okay, supply zones and how they work. But in all these times, we are breaking structures, and that's what proves that it's got some strength to it. Broke this structure here, okay, broke this structure here, so on and so forth. Feeling good for GUEF. Oh, yeah, Edge Finder score is good, and dollar are gaining. Yeah, man. Pound dollar. That's my trade. I mean, here's my. All right, sorry about that, guys. My daily need to reconnect my stream. I'll give you a second to pop back on. All right, guys. Sorry about that. Had to reconnect my stream. All right. Sorry about that, guys. I'm back. Had to reconnect my stream. Oh, that's something on my eye. called sleep. I had to wipe the rest of it out. All right. So anyway, sorry guys. I was talking about the top setup score history. Just to recap what I was saying before the stream died on me. When you start seeing prices go bearish and stay bearish, that's when you start noticing that the actual price starts going bearish. This is important because what am I looking to do? Every time we get these pushes up like this, okay, that's going against the score. So if it's going against the score, I want to be looking at supply zones up here to short it. So we bounce up, we hit a supply zone somewhere over here. And I know this isn't the best looking line chart. I'm actually going to talk to Nick and see if there's any way to get this to be actual candlesticks. But anyway, we get price pushing down as a result of bouncing in the supply over here. Okay, then we get another spike up, which means going against the trend, which means going against the edge finder. This is what we want to see. We always want to see it go against us, because if it goes against us, that means it's giving us a premium price. Okay, so we bounce up here, and what happens? We bounce into a supply zone somewhere over here, because that's why it turned down. Prices move and reverse because they get unfilled orders. Okay, it runs into a batch of unfilled orders, and then the process just repeats. Okay? And this is currently where we're at now. Okay, we got price going against the edge finder. We got price giving us a retracement. Okay, that's where I find my supply zone over here, which is the one I ultimately sold in. So the top setups score history, it's a really cool way to go back and just see how well the edge finder has performed. Oh my God, sorry, share my screen. Man, what is it? Okay, yeah, just to finish again, since my screen wasn't shared. Sorry, guys. When price starts going bearish, this is where you start noticing prices going down. We get the push up against edge finder. It bounces into a supply zone somewhere over here. It has to find supply. It has to find unfilled orders to push price the opposite way. We get another price action that's going against the edge finder, and it bounces into another supply zone somewhere over here. And that's where we get the push down. So this is all I've done over here. Price starts going down, but then it goes against the edge finder. When price goes against the edge finder, my eyes light up, because that typically means there's a supply zone. Oh my God, what is the matter with my screen? Ah! Can you guys see my screen now? Is it good? Is it good? I can't understand my screening today. I don't know why it's okay. It's good. Oh, guys, I'm telling you, YouTube Studio, and I hope they're not listening, it is not the best. It is absolutely not the best. Stuff fails a lot. I tried using OBS software. I spent hours trying to figure out how to configure it and synchronize it with my YouTube page, and it just will not work. So that was originally what we used at Ola Prime, was OBS software. I do believe it was OBS. I know we used StreamYard for a while, and I believe it was OBS there towards the end. But anyway, for whatever reason, when I go to try to set it up for my profile, it just won't work. And that's obviously way better than YouTube Studio, so I'm just dealing with what I have. I'm just a one-man band, so there was probably one little thing I'm missing, but I mean, I'm telling you, I spent hours trying to figure it out, and it just won't work for me. So anyway, sorry about all the glitches and things. That's technology for you. Remember, I'm a trader. I'm not a tech guy, right? So I try to do the best I can. Okay, I'm going to try this one last time, because I think it's important for you guys to see this. The top setup score history. So we have our top setups, but down here we have our top setups history. A very good exercise is to see how good the edge finder is performing. Okay. So when we start seeing prices go bearish, like we did back here on the 13th, okay, you start noticing prices going down. Oh my God. Sorry, guys. I've had yet another problem. My space heater just turned off gave me a power surge. Ugh! Is it the weekend yet? Okay, well, at least my chart's still shared, so there we go. Oh my God. I don't know if I'm going to get through this, guys. Prices go down following edge finder scoring. We get a retracement, meaning price goes against the edge finder. This is when my eyes light up because we get price going up, even though edge finder's giving us a bearish score, right? When it goes up, I like this because I want to find a supply zone off to the left, up and to the left. It bounces into supply and pushes price down. So edge finder is winning. It's winning at life through here. Okay, price balances out a little bit and then starts going against the edge finder. Okay, we have a bearish signal, but we have bullish price action right here. Okay, February 25th into the 26th. This is again when my eyes light up because from there I want to look off to the left, up and to the left and find a supply zone. So that's what happens. Price finds a supply zone somewhere in here. Thanks, Zenny. I'm having a morning. It finds a supply zone, and what happens? We get the push down. Okay, winning trade. Price balances out for a day or two, drops again, and then over here, this is again where my eyes light up, and that's where my eyes lit up the other day because this is where price went against the edge finder yet again. And then I look up and to the left and find my supply zone, which is the 4-hour zone that I got into the short at. And then now we're starting to see that rollover. So sorry it took me like 14 attempts to get through this, but I just thought it was important to show you guys this. If you have the edge finder, whatever your favorite asset is, just go and test it out. And you can always change the dates. Like I think it defaults to 1 day, or I'm sorry, 1 month. I often just like to go back like 3 months. Okay, that'd be December 12th in this case. And it'll just put on more information. And it'll make the line chart a little easier to spot your trends and everything. Okay, here's another great example right here. We had neutral price action. And then as you see on January 23rd, it flips bullish all of a sudden. What happens when it flips bullish? Okay, prices go up. And then you see prices start to balance out and go downwards. What happens? Prices go down. Okay, they dilly-dally around in neutral land for a while. And then we get over to the period I just showed you guys a minute ago. Okay, this is the last month. Prices have been bearish for the most part almost every day since the 13th of February. Yes, 13th of February. And what has happened? Prices have been trending down. So it's really good. It's a really cool tool, and you can do it on all the assets, obviously. But this is our way as customers. This is our way of seeing how Edge Finder is performing. And it's proof that it's a very strong signal, right? So remember, just because an asset appears as a buy or a sell on the top setups over here, just because it does that doesn't mean we just automatically go out and hit the buy or sell button. Because remember, we got to use our chart to time it. A lot of people mistaken this for it. I've actually read through some reviews of Edge Finder in Trustpilot, and I've seen a handful of people. There's, by the way, very few negative reviews. And when they are negative reviews, it's people saying it doesn't work. But it's because they're using it as a signal service to go out and go to Aussie New Zealand right now and buy the Aussie New Zealand. And you guys here, if any of you guys, I know a lot of you guys on here are on Nick's streams all the time. What does he explicitly say? He explicitly says, this is not a signal service. This is not a timing mechanism. This is hey, this asset is very strong on the fundamentals, very strong on the sentiment, okay, very strong on seasonality, moving average crossover as far as the technical side. And this is just saying the conditions are right. So think of this as your meteorology, your weather report. Okay, we've got, like here in Kansas, you want to talk about crazy weather, okay? We just went from 30-degree temperatures, okay, Fahrenheit, which is 0, I guess, 0 Celsius, 32, yeah, I think it's 0. All the way up to 2 days ago, I was sitting here sweating in my room because it was 85. And then now, come into today, it's 21. So anyway, not to get off on a sideshow, but yeah, it just goes to show you how crazy the weather is here in Kansas. We get all the 4 seasons very, very distinctly, and sometimes we'll get all 4 seasons in the same week, sometimes even in the same day. We have wild temperature swings. It's crazy, but that's the way it's always been here. So, but anyway, yeah, that's basically what the top setups page is. This is our weather report. It's saying, hey, there's a chance Aussie Kiwi can go up. It's not saying 100%. There is a 100% chance. It's just saying there's a chance because all the other factors are lining up right. Okay, so just look at it that way. It's not there's no magic bullet at all. All this does is just kind of helps put all the odds enhancers in our favor to go and have a successful trade. That's what it's for. So anyway, that's enough sideshows, guys. Let me know if you guys have any other assets you'd like me to look at. Sorry for trying to get through all that. And what time is Nick on today, guys? I know I've got the last show of the day today. I do know that. Yeah, so I'm on at 9:45 Central. Okay, so yeah, Nick's coming on in 5 minutes, guys. So we'll just take a look at a couple things, and then we'll go hop on Nick's show as well. Okay, right after. What do you guys think? After Nick's show ends, which by the way, it ends at 11:15 a.m. New York City time. Do you guys have any interest in me coming back on for my other 45 minutes? Like after that stream? Or maybe like shortly after? Maybe like right during or right before the lunchtime doldrums start to hit? Because if so, I'll pop on. I've got the whole rest of the day free today. And I've been wanting to kind of do a later show anyway. Why not? Okay. Yeah, I'm thinking of doing that because what I don't want to do is just give you guys 45 minutes and then, that's it. But, Nick's show is definitely important, very important. And then obviously I appear on the show. And so I'm just trying to balance things out because I think we keep missing a lot of people on the West Coast, like California, Oregon, Washington, okay, Nevada, Hawaii. We're missing a lot of people over there because we're up way too early for them. So I think I'll just do 45 minutes today, which obviously I'm going to because Nick's show starts soon. And then, yeah, as soon as the show completes, which I'll complete the show, then I'll just give us another 5 or 10 minutes, and then I'll hop on for another 45 minutes. Okay, Zenny, the difference between fundamentals and sentiment? Yeah, well, let me just finish my 4 minutes out with that, okay? And then again, if you want, hop on later after Nick's show. I'll create a new link, a new live stream link as soon as we're done, or as soon as I'm done, and I'll throw that on there. So you guys should be able to see that fairly shortly. I'll go ahead and plan that. The difference between fundamental and you said sentiment? Yeah, sentiment. So fundamental is nothing more than the economic calendar events. For the most part, the top setups, okay, and by the way, the fundamental side starts right here. Economic growth and consumer strength, inflation, jobs market. This is the fundamental analysis, just those 14 boxes. I think it's 14. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yeah. Okay. So we're looking at our purchasing managers indices. We're looking at a couple polls, okay, consumer confidence. We're obviously looking at the economy itself as far as the economic growth, meaning the gross domestic product. Obviously, retail sales. Okay, we want to see is our money flowing? Is money flowing through our economy or whichever economy we're looking at over here? And then we move over to inflation. Okay, our consumer price index, our producer price index. So consumer price index is obviously our inflation. Hey, what percentage from this time a year ago, since this is our year over year report, what percentage increase in prices are we getting? Very, very big. Producer price index. What percentage of an increase is being bestowed upon businesses and services for buying their raw materials, for hiring people, for whatever? Okay, there's a cost to owning a business. It takes a lot of money to own a business and run a business. So this is just simply saying when we look at the raw materials, when we look at raw materials and everything we need to run a business, what percentage is the cost increase from this time a year ago? PCE, that's the personal consumption expenditure. That is the Federal Reserve's favorite gauge. So they look at CPI and they look at PPI, but they prefer the PCE. It basically takes out some things. I think it's energy, food, and gets down to the. Hold on a second. Yeah, I'll have to look that up. Get you a better answer on that, but that they care about that. They want to encompass it all. Okay, interest rates, and then we start getting into the employment numbers, non-farm payroll, unemployment rate, employment claims, ADP jobs, which is our number one human resources service here in the States, and I would imagine probably in a lot of parts in the world, but they have their own jobs numbers and then the JOLTS, okay? So fundamental analysis says, what are the hard data? What are the hard facts? This says nothing about geopolitics. This says nothing about news articles that you read on, Yahoo Finance or anywhere. This is the hard data. This is the nerdy stuff. Okay. Facts matter in trading. This is why we want to avoid all the gurus on X telling you to, hey, go buy this, go buy that. The signal services, right? Because quite often, a lot of them don't even follow the data. They don't follow the facts, right? So this is the why. This is the reason to get into a trade. This is what the big banks and institutions are focused on. When you watch CNBC, when you watch Bloomberg Markets, okay, when you're seeing all the big bankers on there, the CEOs of large companies, they're talking. A lot of them people are talking about the hard data. They're not talking about a 5-minute chart. They're not talking about a moving average crossover. They're talking about the facts. They're making their buying and selling decisions for their own constituents from these data points right here. So this to me, to Nick and all, probably I think all of us on the channel, this is the most important piece of analysis we can do because that's what the banks are doing. And if they're doing it, and if they're the ones making all the money, then we should probably be doing the same things they're doing. So that's your fundamental analysis. This is the why. Now the sentiment, this is the confirmation. So, hey, the COT, this is the commitment of traders. This is the report showing exactly what the big banks and institutions and hedge funds and pension funds, this is showing where their positions are. So this is basically saying Aussie Kiwi. This is saying that they favor the Aussie more than the Kiwi. Anytime you see this, that means they're net long on Aussie more than they are the New Zealand dollar. So they are favoring the Aussie over the New Zealand by their actual positioning. So that's commitment of traders. This is my favorite report. I'll be honest with you. This is one of my favorites. If we're bullish Aussie Kiwi because of the data, it's nice to see that the banks are already positioned in my favor, in our favor. Yep. See you, Zambezi. So anyway, that's your COT. The crowd sentiment, that's a combination of 3 reports. Okay, that's your crowd sentiment. So that's your put to call ratio, seeing what the options market is positioned in. The AAII sentiment. This is a poll asking people here in the U.S. over the next 6 months, do you think the market's going up or down, the stock market? And then obviously retail sentiment. And this is their real-time positions. Are they net long something? Okay, if we go look over here on retail sentiment just for a moment, just for example, they are, let's go here. Let's go euro dollar, okay, right here in the middle. This is saying that the average retail trader here is positioned 61% long and only 39% short. So when we see that, we do not want to do what they're doing. The average person loses their money, right? The average trader. 90% of traders lose 90% of their money in 90 days. Okay. That is the data. So if the average person loses money, do I want to do the same thing? Do I want to join the herd, or do I want to observe the masses and do the opposite? So the latter is the answer. If they're net long, I want to be going short. I want that to match up to my top setups. So it's a contrarian signal. So in this aisle here, we want to follow what these guys are doing, the COT report. Over here on crowd sentiment, we want to do the opposite. We want to do what they're doing. So this is the relationship between smart money and dumb money. This is the confirmation for the why. And then the technicals, the charts, all that is a timing mechanism. This is saying, hey, let's go find a discount to buy in. Let's go find a premium to sell in. So hopefully that makes sense. That's about as brief as I can make it. I'm actually going to probably re-record some videos on all the analysis groups. I'll let you guys know about it. But anyway, guys, it's that time. Well, we're going to go ahead and hop on over to Trader Nick's show. Again, you can always find him over here if you have not seen a1trading.com. Okay. And then click over here on A1 live stream. And here is the link right here. Goes right straight to YouTube. Here is our schedule. As you can see, I'm on at 10:45 a.m. New York City time. You can go find us all down here. Our contributors. There's my ugly mug right there. Some of my socials I use, guys. If you want to go connect with me over there, feel free to do so. But with that, guys, I'll be back again later on today. So I'll get a link created. And yeah, we'll holler at you all soon. Okay. Take care.